North Dakota first.
Welcome back. And last week, Wall Street was shaken up as online movement led by the social media platform Reddit sent the stock price for GameStop through the roof. So for tonight's conversation, we thought we'd ask a financial expert what he thinks about it all now.
Ben Martinek, an advisor with Bona Fide Finance in Bismarck, joins us now. Hi, Ben.
Hi, Nick. How are you doing?
Doing
Thanks for
well.
having me.
Bona fide, of course, translating to good faith. So let's get that out of the way. First of all, what do you make of the whole situation that happened last week?
Well, I think, we see these market skirmishes from time to time in which it's a lot kind of like a military positioning where somebody might overextend themselves or make themselves vulnerable. That took place with the GameStop stock, in which some hedge funds were ultimately betting against the stock just because it was being negatively impacted by COVID. And they thought they could make money by seeing the stock price go down. That's called shorting a position. And what happened is that so many of those hedge funds took a short position. It was like 2.5 times more than the stock was actually in circulation or being traded. And so Wall Street Bets had seen that they were overexposed and extended, thinking again of a military analogy, and they decided to go and charge them. And the way you can do that to show a person's vulnerability in a short position is by buying stock, and just supply and demand being what it is, that pushes the stock price up. And so as the stock prices rise, that puts the short position holders in a bad way because they need the position to go down to win on their bet. And instead, the stock is going up. And so in order for them to get out of that position, kind of like a retreat military-wise, they're all leaving very quickly and experiencing heavy casualties, pushing the price higher and higher.
So yeah, we've heard stories of regular folks making tens of thousands of dollars by riding this GameStop wave, but what happens now? What do you want people to know?
Well, I mean, these little skirmishes are fun, and you can make money in the market by trying to take advantage of mispricing, which is exactly what happened, and ultimately taking advantage of people putting themselves in a bad position. But, is GameStop ultimately a stock that we want to be holding? Do we think the long-term bet of GameStop is a profitable company? I don't think so. This is not a way to accumulate long-term wealth. Maybe a little bit of like a lotto winnings, if you played your hand well, but it's not how I would want you to grow your returns in a more reliable fashion.
So Robinhood makes it very easy to throw money into the stock market and apps like it. Do you think it's a good way to invest?
No, not for the most part. I see it more as a hobby or as a way to pass the time, make investing a little more interesting. But really the best way to invest, in my opinion, is to do a broad market index fund, buy into the market as a whole, take market prices as they are, and accept that, if companies in aggregate are profitable, I don't need to be any smarter than the market. I can just simply buy into the profitability of the economy, and I'll see returns that way. I don't have to try to get into the day-to-day movements of the market, just like we saw here last week with GameStop.
Ben, a financial advisor in Bismarck, thanks so much for your time tonight.
My pleasure. Thanks for having me.
Next on